My point to you is simply this. This is just beginning. And these countries have understood the Achilles heel to the system is standing for delivery. No one ever did before. And the countries in the global south and east were never sophisticated, coordinated, or wealthy enough to do it. Now they are. And they're draining the exchanges, both the LBMA, the COMEX, the ETFs, and even the Shanghai Metals Exchange. They're all being drained. And I would tell you this is just the very beginning, I think, of where gold ultimately goes. So for those who think they're too late or want to, in this case, take profits, do so at your own peril. I think it would be a very big mistake.
In recent years, the global gold market has witnessed a significant shift, with central banks dramatically increasing their gold reserves, particularly those in emerging economies. This trend began in late 2022 and has been a key factor in driving gold prices to record highs in 2024. After a 3-year hiatus, the People's Bank of China resumed gold purchases in November 2022, coinciding with heightened geopolitical tensions and economic uncertainties. While PBOC officials have remained tight-lipped about the motivations behind this decision, experts speculate it may be linked to the freezing of Russian reserves following Western sanctions. AndySchectman, a renowned expert in precious metals and international finance, offers an intriguing perspective on this trend. He suggests that countries with substantial gold reserves could revalue gold at significantly higher prices, up to $10,000 an ounce. According to Schectman, such a move would dramatically improve the balance sheets of central banks holding large gold reserves. Recent trends in the gold market indicate a significant shift in global financial strategies. The World Gold Council's survey reveals that about 20 central banks plan to increase their gold holdings in the coming year, driven by heightened geopolitical and financial risks. This aligns with recent data showing central banks purchased 10 metric tons of gold in May 2024 alone, while 29% of central banks surveyed intend to boost their gold reserves over the next year. AndySchectman argues this trend represents a fundamental change in the global financial landscape. He suggests that countries in the global south and east can challenge the existing system by demanding physical gold delivery, putting pressure on gold exchanges and ETFs. Please tune in for our exploration of AndySchectman's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
If you look at what's happening in China right now, there is an arbitrage play going on where gold is 40, 50 bucks higher, maybe a little less, but silver is over $4 higher than the Western COMEX and LBMA price, or LBMA price, which is incentivizing arbitrage. But what happens if they said, look, he who has the gold and the commodities makes the rules. Let's just say we'll peg gold at $10,000 an ounce. It's important to understand that currently that gold revaluation account is on the liability side of the balance sheet. The gold that they own is on the asset side. In other words, the rules are for central banks, you're not allowed to offset liabilities with your gold asset. So they put the mirror image in what's called the revaluation account on the liability side of the balance sheet. Hence, they balance each other out, balance sheet. It would be very easy, and this is what the Dutch central banker is saying, to make their balance sheet go from putrid to pristine like that if they just revalue gold. What is gold worth? It's worth whatever the highest bidder will pay for it. And if China and India and Russia and all of these countries say gold's 10,000 an ounce, who does that benefit the most? Oh yeah, that's the countries that have been buying the hell out of it. And when you talk about China, if you believe they only have 2,600 metric tons, I have some oceanfront real estate to sell you in Arkansas, because they've been producing 400 to 500 tons a year for the last 25 years. They're the largest producers and importers in the world. For years, they never told anyone how much gold they have. Heck, we don't even tell everyone how much gold we have. Well, we do. It's supposedly 8,300 metric tons, which hasn't been audited in over 60 years. And when Ron Paul says, let's audit, no, turn down. So the point of it is all of these countries who are wickedly buying gold are not being honest about how much they are buying. You have commercial banks in China that work on behalf of the PBOC that buy gold from the refineries in South Africa and in Switzerland. They don't tell the IMF how much gold that they just bought on proxy for the PBOC. You got gold that they buy that's under 995 pure. That doesn't get reported to the IMF. Heck, the IMF came out recently, just a month or two ago, and said that the amount of gold China says they have is fugazi. It's way, way understated. And so my point to you is, why would they want to tell us how much gold they have if indeed they will revalue it? Here's how much gold we really have. And in other words, it would crowd them out of their continual accumulation of gold using the suppression of the Western central bank prices, where on the LBMA, they admit to trading 20 million ounces of gold and 290 million ounces of silver per day. However, they also admit that the numbers that they publish are 10 times understated, because they only show the settlement. If I sell you 100 contracts and I buy 200, the net is 100 for me, but they don't show that I traded 300. So if that really is the case, they're trading 200 million ounces of gold per day and 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply, distorting the hell out of the price in gold and silver. And my point to you is simply this: this is just beginning. And these countries have understood the Achilles heel to the system is standing for delivery. No one ever did before. And the countries in the global south and east were never sophisticated, coordinated, or wealthy enough to do it. Now they are. And they're draining the exchanges, both the LBMA, the COMEX, the ETFs, and even the Shanghai Metals Exchange. They're all being drained. And I would tell you, this is just the very beginning, I think, of where gold ultimately goes. So for those who think they're too late or want to, in this case, take profits, do so at your own peril. I think it would be a very big mistake.
The global economic landscape is witnessing a significant shift as BRICS nations and their allies move to challenge the U.S. dollar's dominance in international trade, particularly in the oil and gas sector. Financial expert AndySchectman highlighted this trend, which points to a potential remonetization of commodities like gold and oil. Schectman cites a notable example of this shift: China's agreement to modernize Iran's largest airport in exchange for oil payments, bypassing the traditional dollar-based transaction system. This move exemplifies a broader trend of countries seeking alternatives to dollar-denominated trade. The BRICS alliance has recently expanded its membership to include 4 oil-producing nations: the UAE, Egypt, Iran, and Ethiopia. Perhaps most significantly, Saudi Arabia, the world's largest oil producer, has been invited to join BRICS. While the kingdom is currently weighing its options, its potential inclusion could be a game-changer. If Saudi Arabia joins, the BRICS alliance will control an estimated 42% of the global oil and gas sector, potentially leading to a paradigm shift in how oil deals are structured and settled. Let's get back to the interview.
All the OPEC countries on the Belt Road, Saudi Arabia joining the BRICS, Saudi Arabia joining the Shanghai Cooperation Organization. You mentioned, by the way, the president of Belarus. He also called, another thing I've been saying for 3 years, he has called for a summit to introduce the SCO, the Shanghai Cooperation Organization, and I highlight the word cooperation instead of coercion, and the Eurasian Economic Union, who Sergei Glazyev is the economic finance minister for the Eurasian Economic Union, and he is the one who has a big role in what I'm about to talk about. He has called for a meeting of these two unions to join the BRICS. It's going to happen. But all of these things that Saudi Arabia has done as a result of our signing executive order to go green, turning our backs on Saudi Arabia in many respects, and then, you know, what's happened as a result of the weaponization of the treasury market, the dollar market. So in any case, there's this meeting in Novigrad, and it coincided with the G7 meeting. And the Royal Crown Prince of Saudi Arabia turned down an invitation to the G7 meetings. I'm too busy, you guys, but thanks for the invite. And then sends his finance ministers to the BRICS meeting in Novigrad, where 20,000 people attended in over 130 or 40 countries. What came out of this meeting were a couple of very big developments. First development was that 59 countries said we're joining BRICS, on top of the 10 that are already there. Now, we'll know in October which ones of those 59 have been admitted and have formally applied, but 59 countries have come out and said we're going to join BRICS, and a whole bunch more are contemplating. But a bigger development came out, and that was 2 meetings between Sergei Glazyev. Now, Sergei is, you know, this finance minister who's been saying for 3 years, this is why I've been saying that the BRICS currency will be pegged to a basket of commodities and a basket of currencies. He's the architect of all this. The meeting was between Glazyev, Putin, and Dilma Rousseff. Dilma Rousseff, for your listeners who don't know, was the former president of Brazil. and is now the president of the BRICS New Development Bank. This is no small job. She is the head of the BRICS New Development Bank. And she came out and confirmed that in the two meetings, they have agreed in principle to a new BRICS settlement currency called the unit. We're going to get into that in a moment. And that it would all be traded over Project M-Bridge. Now, I don't know if I've spoken with you about M-Bridge, but I have talked a lot about it over the last year and a half or so. It came out in 2023. It's actually been developed for years before that, but developed between China, Hong Kong, Thailand, and the United Arab Emirates. It is a cross-border payment system that allows these countries to trade their central bank digital currencies with one another, not going through any United States intermediary banks or the SWIFT system. I believe that gold and oil have been remonetized, right? I've said that incessantly, including, look at oil. I always talk about gold, but look at oil in terms of its value. China was awarded a massive $2 or $3 billion contract to modernize Iran's biggest airport. And they're being paid for it in oil. Not dollars like it used to be, but in oil. So I find it ironic that the first two trades that they did in testing this system were between China and the UAE using digital yuan to buy oil and to buy gold. And they worked. And now it is working.
As we continue to observe these developments, it's clear that the global economic landscape is in flux. The decisions made by key players in the coming months and years could have far-reaching implications for international finance, trade, and geopolitics. How do they impact the global economy and your financial future? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.